Does the silver price still respond to currency inflation, or what is really driving the price at this point?
The land of Arcadia.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. And today I'm joined by Michael Dirienzo of the Silver Institute, who helps compile a lot of the numbers, provide insight into the silver market, which is certainly no easy task. Does that along with metals focus and providing overview of supply and demand so we can at least get an idea of what is going on out there in the silver world. So Michael, it's great to have you here on the show today. And how is everything going with you?
Well, Chris, I'm doing well, apart from the fact that I'm stuck here in blazing hot Washington, D.C. Other than that, everything seems to be fine. But we're doing well. You know, April, we put out our latest version of the World Silver Survey. We have a lot more reports to put out this year. We've done one already on brazing and soldering. Many people aren't aware of the fact that silver plays such an important role in that end use. We'll be doing one on silver and jewelry with a focus on millennial purchases. And later in the year, we'll be doing one on the Indian investment market. And shortly, within the next 6 weeks or so, we're putting out another report that is being done on our behalf by Oxford Economics on making the case why everybody should have silver in a mixed asset portfolio. So it's a busy year. And, you know, what we do here at the Silver Institute, we talk about all things silver. So in many ways, we're like the World Gold Council, but with not nearly the budget that they have or the bandwidth. So we do a lot with a little, and we try to put out as much information on silver out to the market as possible. This year, we started a very aggressive social media campaign where we are focusing on little snippets of the market. It could be from automotive to electrical to the fact that you know that the Vince Lombardi trophy for the Super Bowl is made of 8 pounds of silver, little things like that, just to make people more aware of how silver surrounds our daily lives.
Yeah, well, you've been doing a good job. I saw a bunch of your posts on LinkedIn, which do share some good information. And
Thank you.
why don't we hop in? Because certainly challenging environment right now that we're seeing with the silver price. We have the interest rate hikes going on. And in the midst of still high inflation and something that you and I talked about a little bit offline a couple of weeks ago, does the silver price still respond to currency inflation, or what is really driving the price at this point?
Well, that really is one of the top issues we encounter here at the Silver Institute, given the market dynamics literally across the globe. But let's just take the United States, for example. You know, precious metals on the whole, their attribute and its appeal as an inflation hedge may seem somewhat counterintuitive that prices have so far failed to benefit from the rampant inflation across key economies. So that said, the precious metals market has changed quite a bit in the last 50 years when both gold and silver were used predominantly, not singularly, as an inflation hedge. But before looking at silver's price performance 2022 and through today, it's worth noting that investors had already bought a significant amount of silver during 2020 and 2021. And that was typically following the pandemic. And those that seeking silver as a hedge against inflation and other economic uncertainties, in our opinion, may have already built sufficient long positions. And even with the recent sell-off, investors' silver holdings, especially among the long-term investors, have remained elevated by historical standards. Now, the challenge, in our opinion, for silver prices this year has been, of course, the monetary tightening adopted by central banks and the Fed in particular, obviously to rein in inflation. This in turn has led to a surge in the dollar index and bond yields, both of which tend to have an inverse relationship with silver and gold prices. Now, while the inflationary pressure remains multi-decade high in the last few months, the Fed's aggressive tone and perspectives for even bigger interest rate hikes have already seen medium to long-term inflation expectations moderate. Moreover, faster than expected interest rate hikes have already started to weigh on the economic outlook. So, Chris, this has resulted in rising recession fears.
Right.
And it's our opinion this has further undermined silver prices, given its dual role as both a precious and an industrial metal.
Yeah, and do you think there's been a difference between the retail and the institutional investors where it seems like a lot of the retail people or the silver stackers certainly are seeing these things and responding versus on an institutional level where a lot of these funds, I don't think actually want a big pile of silver. They just want the price exposure, yet
Sure.
often seem to not be as concerned about the position that the Fed is in at this point.
Well, that's a good question. And quite frankly, when you compare silver to gold, the silver investor, including those that buy ETPs and ETFs, they tend to be a lot stickier than the gold investor. I think they're more passionate about the metal. They're very excited about its duality as both a precious and an industrial metal. So, last year's Silver Squeeze did a remarkable job of allowing a whole new class of investors exposure to the market through social media. And while some of them may have dropped off, and the price certainly has come down from $30 an ounce that we saw last February in 2021, the fact is they're still there, they're still passionate, and theirs and our day will come again soon.
Yeah, and it's interesting because I think there's a difference when someone actually buys physical, you are paying that premium, not as easy to trade back and forth as you have in paper. Is that also creating a bit of an issue in the market?
Well, it is creating an issue. I was just reading a note earlier this morning that we're looking at. Let's see here. Let me take a look at this. Vault holdings in London were at their lowest total since September of 2016, and it really reflects the ongoing strength of physical silver demand. And that may sound somewhat counterintuitive given the fact that how the price has performed recently. But, in our view, it's a result of a mix of quite different drivers. Now, the premiums have been a huge issue. The premiums, it's just a market demand issue, correct? But the fact of the matter is we need to get some of these national mints, including the U.S. Mint, to be running 24-hour capacity on the planchettes, the blanks for the American Eagle coins. And they need to broaden the base of those refiners that can provide these blanks to the mint. So we've been working with the mint on ways to expand their portfolio of vendors to get more supply onto the market.
Yeah, I'm glad you mentioned the U.S. Mint because I believe they are legally mandated to be providing product, yet have basically shut down on those Eagles. What do you think is going on there? Is that makes sense to you that they just can't get the blanks, or is there any solution that you see?
It makes sense, but the mint historically has had manufacturing issues, management issues, regardless of who the mint director is. I remember back in 2012 and again in 2016, we went to the mint with a concrete plan of action that we developed for them to go out into the market and get more planchettes, which were up to U.S. code as directed by law of the U.S. government. And we didn't see much action at all. So we've offered consultations with some of our consultants. We've offered one-on-ones. What we really would like them to do is to be more predictive of the market going down the road. So in other words, while nobody can judge where the gold and silver price is going to be 3 or 4 years from now, you can certainly see where the demand of silver as a precious metal, as an investment, especially from the U.S. Mint, is quite high. And I don't see it slowing down anytime soon.
And have they given any update of when that's coming back online? It seems like it's been a while where they've just been out, and
I've not heard a word. There's a new mint director, and I confess I have not met with her. I had a very close relationship with the previous mint director, David Ryder. I have spoken to some of the VPs and others at the Mint, and all I can say is that we're on it. We're trying to get this thing, fixed.
Yeah, that would certainly be good because we've seen the premiums on the Eagles shoot up quite a bit. There's a report of a really large order for Silver Eagles that has cleared out a lot of the supply. And obviously, we're seeing premiums on junk silver as well quite high. Um, Although, one thing with the recent price decline, obviously, that's making it harder on a lot of the mining companies. Talk to a lot of miners on the show here, and it's certainly not an environment where it's encouraging people to go out and start new projects. Although, on the other hand, I believe it's about 70% of the silver supply coming from non-primary silver miners. So,
Mhm.
how does that stack up? And what do you see there in terms of when that has a more significant impact?
Well, that is another great question. And it's a question I have been asked before, but it's also a question that I think is sort of straightforward to answer in today's environment. Just looking at the numbers, at what our consultants have said back in April and beyond then, even with these lower prices, Chris, it's less likely to affect mine production in the coming years. Silver mine production, in fact, is expected to post successive gains over the medium term. And our consultants at Metals Focus feel that it could achieve a new high in their data series in 2022. Now, this is primarily, and people need to remember this, a result of the shutdowns in 2020 and early 2021 in key mining countries such as Peru and Mexico. So the growth in output will primarily come from large operating mines such as Fresnillo in Mexico, Rochester in the United States, and let's not forget about the restart of mining in several mines in Peru. And you couple that with the ramp up of large projects in Mexico, that will support growth alongside a forecast restart of operations at the Escobal mine in Guatemala in 2024. So look, these are not going to be earth-shattering numbers, but when you come from such a low baseline in 2020 and early 2021, it's bound to grow.
Right. Do you think we will see any drop off from the non-primary mines, though? It's obviously not getting much easier for a lot of the other products that miners are going after.
I
So,
think that very well could be the case. And I speak to our member company CEOs quite often, and I think it's a concern that they have as well. But the fact of the matter is, and the question of the day is primarily, in my opinion, is where is all the silver going to come from to propel these electric vehicles, to the solar cells, the green energy environment, and let's not forget nuclear. Silver plays a small but a very, very key role in both nuclear and wind power. So basically on the electrical contacts that are included in both those applications. So we're going to need a hell of a lot more silver. And the question is it recycled? Is it drawn down from above ground stocks, or is it newly mined silver? And you couple that with the current desire of investors, and then you can find yourself in an even larger deficit than we do today.
yeah, and something you mentioned there about the projections for the electric vehicles, solar panels. Are these projections just not going to be met at the current pace that we're going? Where I look at the numbers coming out and seeing what they're forecasting, especially solar, some of the forecasts, growing quite a bit. Are these government projections that they're saying now that will ever be able to be met in the current environment?
I don't know the answer to that, Chris, but I tell you, it's going to be quite challenging. You look at some of the reports that come out from other analysts across the country, Matt Watson at Precious Metals
Right.
Commodity Management, for example. His line is basically right out of the movie Jaws, where they say, we're going to need a bigger boat. He's like, we're going to need a hell of a lot more silver. And I think that's the case as we go forward. Look, there's no way governments across the globe are going to be able to flick a switch and automatically go to green energy. But there's no question their desire to one day lower significantly their reliance on fossil fuels by using a combination of electric vehicles, solar power, not so much nuclear yet. You don't hear a lot of talk about that, except for those countries that already employ nuclear power. But it's going to be a challenge for governments. It's going to be a huge challenge for manufacturers. And I think our miners, or miners across the world, are willing and able to get in there and help supply that silver.
Yeah, and you mentioned Matt Watson. I did see his presentation, and he was saying that basically he sees a need of doubling of the silver supply over the next 10 to 20 years, which will be interesting to see how that occurs. Another question I had for you, in the numbers from the World Silver Survey, we do see a deficit for the last couple of years if you factor in the exchange traded products. Where is this silver coming from right now?
Yeah, that's a question that we've looked at and have addressed, but it's becoming much more clear in today's day. The market was in a surplus for much of the 2010s, which resulted in a rise in silver inventories held in over-the-counter markets and commodity exchange vaults. Our consultants show that silver above ground stocks rose by around 310 million ounces from 2010 to 2020. And those accumulated inventories are believed to have fulfilled the deficit since 2021. Now, liquidations from investors so far this year, albeit still relatively modest, especially when you look at ETP outflows, has been another source to fund the deficit. But I do know that the folks at Metals Focus are again projecting a more significant deficit for next year. I don't have that exact number. I know the 2021 deficit number, but at 51 million ounces, I believe it was in 2021, it could be much higher.
Yeah, and that's what I was guessing, because we see some metal coming out of the COMEX registered, coming out of the ETPs, and perhaps meeting that deficit there. One thing, again, back to what Matt Watson I found interesting about his presentation, he wasn't really looking at the Fed or the money printing issues, and he was just looking at supply and demand numbers. But do you think we're eventually going to get that premium back in there due to financial system concerns, or a lot of people are now calling silver a base metal and not a monetary metal anymore? What would you say there?
Well, they can make that claim all they want, and to a certain degree, with its industrial attraction, some people have said that historically for many, many years about silver, precious versus industrial. But we think that silver tends to show a greater correlation to gold than with base metals. And should economic and financial conditions deteriorate further, this may well support investor interest in defensive assets such as gold. This in turn will ultimately benefit silver, in our opinion, though silver's industrial attribute means that the white metal may initially underperform before rising. So I think Matt made that point in his presentation as well. But what we're trying to say here is that silver's dual role benefits the white metal down the road. We really do believe that there are investors that want to hold the physical silver, and that there are investors that want a combination of the physical silver, investment in mutual funds, ETPs, but also look down the horizon at the growing uses of silver in terms of industrial demand projected throughout the next several years.
Yeah, and do you think it will come down to that investment demand at the margin, where we see there's, the supply that comes out and a large industrial portion, yet if we do see more investors in a significant way flow into silver, is that what could drive some sort of gap in the price?
I do believe you're absolutely right. I mean, I think you're right on target there. Look at, as I mentioned earlier, there are investors that look at both sides of the silver equation. And people are passionate really about the physical silver. I've seen the photos, I've been to the vaults, I've seen the physical silver that people have in their homes, in their banks. It's unlike anything I've ever seen. I don't see the gold side having that much passion with respect to silver. And there's really one reason why, because it is the indispensable metal. Silver holds value. Uh, I mentioned earlier that investors in silver are really sticky. When you compare gold to silver in terms of ETPs, we have really low outflows out of ETPs throughout the day. And given the fact that we only that product is the first product, or the second product, I should say, the most popular product, SLV, has only been on the market since 2006.
Right. Yeah, and it's certainly interesting where gold, most of the gold's still out there, and that was really what drew me to be fascinated with silver, where you have so much of it consumed. And at this point, would you agree? From the numbers I've seen, there's actually less investment grade silver out on the market than gold at this point. Does that sound about right to you?
I have read that. Absolutely, Chris. Yes. I can't verify it, but that's what I've read on several occasions.
Yeah, which certainly leaves an interesting dynamic. Another thing that you and I talked about offline was whether the crypto market has taken capital away from silver, many viewing the cryptos as some sort of monetary hedge. Do you think that that has impacted the situation and might have been different otherwise?
Well, I'm kind of 50-50 split on this. I think there is no question about it that the enthusiasm over crypto, which is a relatively new product, we both know that, has taken some of the shine away from investment in traditional hard assets like gold and silver. But we believe that investors looking at silver, bars and coins in particular, are somewhat different than the crypto investors. That's because we feel that the silver investors look at silver as a medium to a long-term investment. Liquidations from those investors are slow and rather limited. And it's somewhat in contrast to cryptocurrency investors who are often looking for shorter term price gains. Ironically, I'm having breakfast tomorrow with a gentleman out of Vancouver, I believe, who's written several books on crypto, and he's 100% against crypto. His name is Bob Seaman, and he's written several books, but he feels that it's just online or gambling and that young people are going to get swept up into this. I don't personally have an opinion on crypto, but there are a lot of naysayers. But one interesting point, the crypto industry is one of the fastest growing lobbying industries in Washington, D.C. And this is all within the last 3 to 4 years. They are well funded, and they've got some of the best lobbyists and the best law firms behind them. So they are ready to combat any potential negative regulatory action, either at the Fed or at the U.S. Congress.
Yeah, certainly an interesting market and a lot of money flying around there. Quite a sell-off we've seen earlier this year, and was interesting noticing that some of the top cryptos by market cap were valued higher than the entire investment grade silver supply out there. So interesting to see if some of that money or all the debt money or derivative money comes into silver, since it is such a small market. Although, Michael, before we wrap up, any other key trends that you feel silver investors should be aware of that they might not be thinking about right now?
Yeah, we are very confident that silver demand, silver offtake is going to post another consecutive record um, um, in successive years. Okay, so we're talking 2022, 2023, and perhaps beyond. On top of growth in global GDP, eventually structural forces such as rising electric vehicle electrification. Let's not forget 5G technologies. We mentioned green energy should all boost silver uses. Now, although those are solid demand fundamentals, so far we haven't been sufficient to revive, they have not been sufficient to single-handedly revive investor interest. But that will come, and combined together, they should help support prices as well as attract a new investor interest. So look for our reports coming down the road in the second half of 2022. And if you have any questions, or any of your listeners, they can contact me directly through our website.
And Can you give that website address one more time? So
Sure.
people know
It's
where to find you?
silverinstitute.org. And below on the bottom of the page, the main page, there's a contact us button. And that email will go directly to me. And we'll go from there.
Well, I appreciate that, Michael. It's good to have any source of information coming out of the silver market, and you guys, along with Metals Focus, doing a good service. And appreciate you checking in, making some time, and we'll look forward to check in with you soon and see how things progress.
Absolutely. Absolutely, Chris. Thank you for your time. Feel free to call me anytime, and we'll chat with you soon.
Well, thank you, Michael, and the Silver Institute. Sure, great to get your insight, especially given all the data that you have access to and the years that he has spent studying silver. So I appreciate that. And also would like to say thank you to BlackRock Silver for bringing us today's episode. As I mentioned about 2 weeks ago, BlackRock did announce some drill results 1 kilometer beyond the boundary of their April 2022 maiden resource estimate, effectively doubling the footprint of the mineralization. And the highlight, of course, was drill hole 52, intersected 4.6 meters, grading 211 grams per ton silver equivalent, including a 0.7 meter zone grading 702 grams per ton silver equivalent. So good to see that BlackRock is expanding the resource beyond what they published in April. And to find out a little bit more about that, well, you can just click on the video that's coming your way now.